What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. It's a 3-day weekend for some people, and it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we've got a major executive leaving Google. We've got Bing and Microsoft continuing the innovation over there. We've got NVIDIA earnings next week. But we kick things off like we always do with Meta Platforms. Start of the week at 179, down 3.5%. Finish the week at 172. You're going to love that technical chart pattern, just filling in that gap beautifully. House Judiciary subpoenas. Boy, that's a mouthful. Big tech out there seeking a content moderation info. Obviously, conservatives now have control of the House of Representatives, which controls a lot of the kind of quote-unquote investigations. They're ushering up big tech. I believe they had Twitter in last week. We'll see if the CEOs and executives at these companies actually comply with these, because they're not necessarily obligated to do that. Meta offers harsh employee reviews, setting a stage for more exits. So what is happening is they're essentially telling employees whether or not you're doing a good job, kind of a good job, or maybe potentially a bad job over at this company. And some employees are saying this is OG Mark, which is kind of the original gangster Mark, or the old school Zuckerberg. I think if Mark had a pair between his legs, he would just fire these people. If you're not doing a good job, he would pull an Elon Musk and get him out the door. Mark's doing it his own way. I would expect more cost cutting coming from Meta. Now, Mark launches a broadcast chat feature via Instagram. I believe there's something very similar on WhatsApp. And so they're essentially kind of rolling out this feature. I would look at it more as kind of like a group text type of thing where everybody could be sharing photos. I believe that is something that is relatively popular on WhatsApp, or a version of this. And now it is coming to Instagram and is likely coming to Messenger later this year as well. Instagram ends its live shopping feature. That was a feature allowed you to essentially kind of tag products, maybe go live. I know Poshmark has a feature like this. There's other kind of smaller players out there. There's a website called Whatnot that essentially is kind of a live streaming platform for shopping. Instagram tried their hand at that. Doesn't look like it worked out relatively for them. Also in this headline, you have the UK extending a Meta data probe into the summer. This alleges that the company potentially uses its dominant position in social media and digital advertising and leverages the data that they have. Obviously, these companies are under fire from regulation across all sides. The FTC commissioner, Christine Wilson, plans to resign. I think she actually did resign due to Lina Khan. As you know, just a week or so ago, Meta won a key ruling in a California courtroom that the FTC decided to bring against the company, despite many of the commissioners and the staff of the FTC saying that Lina Khan should not bring that. She decided to bring it on. The company, or in this case, the FTC, actually lost that case in court, which is incredibly embarrassing. When a government agency goes to court, their batting average is usually exponential, like astronomically high. In this case, the FTC is getting shut down, and it's embarrassing. It's actually embarrassing. It's setting also precedent from a lawsuit perspective. So these corporate lawyers, man, they make a lot of money, okay? So now all of them are going to be pointing to this within ruling. So any future case, this is why the FTC commissioner, why she can write books about criticizing Meta and big tech, she can't necessarily continue to go to court and lose, because the corporate lawyers can just simply point to these cases and the similarities to the current case that is being litigated, and chances are a judge is not going to want to step on the toes of another judge, particularly out here in California, which gets its bills paid largely by big tech. Moving on to Apple, start of the week at 151. This one actually held up pretty nicely, relatively flat. Finished the week up about 0.8% to 152.55. Apple said to start laying off contractors in recent days. We've seen most of these tech companies actually lay off full-time kind of tenured employees, if you will. Apple's largely avoided that. They have a large amount of contract workers, which they tend to renew on kind of a 12 to 15-month basis. It looks like they are not going to renew some of the contractors there. Apple's manufacturing partner said to secure a new site in Vietnam to help boost production. That was Foxconn trying to boost Apple's manufacturing out of the mainland China, if you will. Apple said to face difficulties in India boosting production. This is related to the fact that Apple is seeing a lot of defects in terms of the production, upwards of maybe 50% of the components only good enough to be sent on to Foxconn. So Apple's going, this isn't isn't something that's going to happen overnight. Okay, you can maybe shift a very tiny company's supply chain overnight, if you will. Apple, this is like, the Titanic. They've got to steer this thing. It's going to take a couple of years. I think India is a great option for them. It will just take some time. It's not going to happen overnight, but it is a fantastic option in my opinion. Taiwan Semiconductor says it will increase its Arizona chip I think we've done like 3 stories on this. They just keep investing here, because what I think Taiwan Semi is going to see is they're going to be able to make these chips here in the United States. They're going to get large subsidies, probably from definitely from the federal government. My guess is also out there in Arizona, they're going to get large subsidies for that as well. They're probably going to be able to do it profitably because Apple has a need to generate these chips here in the United States, insulates their business a bit, and that will be beneficial to Apple and its shareholders. They're going to boost their investment by over $3.5 billion. I think the other thing that Taiwan Semi has seen is that they're likely to win this race. Yes, you have Intel, and I actually am rooting for Intel in this space, but they're probably going to beat Intel to the punch to building that fab. They have more expertise in that, and it looks like they probably have a better financial runway as well. Apple reportedly planning on a mixed reality headset debut in June. We get an alternate headline related to this every week. Sometimes it's on, sometimes it's off. I would just wait until the product is very firmly announced. Sometimes you get some very good rumors, maybe a month or 30 days ahead of a release, especially a brand new product for Apple. I would just wait for that. My guess is they have a finished product. Whether or not they want to release it is up in the air. The DOJ is reportedly ramping up competition probe of Apple. This is related to their App Store and their software, which they believe is anti-competitive. Apple is granted a patent for a foldable device, and it speculates Mount whether or not they'll release a device. I believe we had a headline last week that they are planning to maybe do a foldable iPad, which certainly would be an interesting product. Apple gets patents for things all the time. Whether or not they actually release a product for that remains to be seen. Apple saw a 6% increase in the Chinese iPhone sales as the smartphone market perks up. That is because I believe you saw our headline last week where you had essentially kind of Chinese New Year, if you will, and kind of discounts being passed through by a lot of the large online retailers. It was one of the first times I've seen actually Apple products go on discount. And so it seems like a product that you discount, much like a Tesla, when you discount it, it tends to increase the demand and the sales. Intel may never see, quote, peak PC revenue again. I know there's going to be some Intel fanboys out there that are not going to believe this, but look, this is what we've been saying on the channel. When the M1 chip, they're on M2 by now, and they're probably going to be on M3 by later this year. When the M1 Mac chip, which is the chip powering virtually all the devices outside, I believe, the phones for Apple, when that came out, I said, this is a fantastic product. This is a giant leap forward, particularly for notebook computers, lesser degree to PC computers, lesser degree for gaming computers, but the vast majority of people do not buy a computer to play high-powered video games on them, believe it or not. And it was going to take a lot of share and a lot of business away from Intel, and they were able to innovate very quickly and create a product that was as good or better, and they just simply have not been able to do that. And most analysts, I think, are seeing that the PC business for Intel is likely over for them, at least from its peak that it had achieved earlier. Moving on to Amazon, start of the week at $97.23. And the week at basically the same price. Now, I published an article here on Seeking Alpha. It actually got an editor's pick, which is not easy to get. But it says, buy Amazon's core business, get AWS free. Most of the articles that I see are actually the reverse. They say, buy AWS and buy it for like 20 times forward sales, and you get the core business for free. I actually say, no, you are actually getting AWS for free. And I've done videos like this here on the channel where I talk about the online store business. Amazon.com is actually not worth that much. The physical store business, the Whole Foods, that business is not worth a whole lot. The advertising business, that's actually worth a decent amount of money. Third-party sellers, I would say, might be worth as much as freaking Walmart. I mean, that business is fantastic and it's very underrated. You have the subscription business, which is Amazon Prime. You have the other business, which we'll talk about here in a minute, is MGM Studios. That is growing very rapidly, 77% year over year. If you total up all that, you're getting it near a $900 billion valuation for Amazon. The company is worth about $1 trillion. So you're essentially getting the AWS business for free, because I didn't even include that valuation in the calculations for $900 billion. So Obviously, I'm talking up my own book. I'm pumping up my own stocks, which I don't really like to do. If Amazon stock goes down, my kids are still going to eat. Stars teams up with Amazon to bundle their services with MGM Plus. So apparently I'm not aware of this. There's this MGM Plus service, and I believe it's probably not that expensive, but I think you can get it on Amazon Prime Video. But now you're going to be able to subscribe to Stars. You're going to be able to get this MGM Plus layered onto this. It's just incremental value that Amazon gets for MGM Plus. I believe they paid maybe $8 or $9 billion for that. And they're just, you see in the other category of their business, which includes services related to licensing and distributing video content. This is essentially licensing off that MGM Studio content. That is a rapidly growing business for them. And so they're just monetizing it very well. I don't know how large, that's probably not largely profitable for them, but it is monetizing the investment that they put up. iRobot, which has been agreed to by Amazon, but needs to get through regulators, tick lower on a report that EU is set for a probe into Amazon's takeover of that company. iRobot reported their earnings earlier this week. Revenue came in at $358 million. That was a decline of 21%. So maybe that'll help Amazon get that deal through regulators. Retail sales come in hot, but there are some disappointments, including the biggest pullback in January was actually e-commerce spending. So Amazon, eBay, and other online retailers started to reel, and that might encourage Amazon and their CEO to boost their brick and mortar presence. And that's according to some reports that Andy Jassy is going to actually, quote, double down on the company's, they call it struggling grocery store business, double down potentially on Amazon Fresh, potentially Whole Foods, potentially other types of in-store retail programs for Amazon. Certainly be interesting to see how that plays out. Amazon competes its robo-taxi test with passengers on public roads. This is a company that is wholly owned, I believe, by Amazon. I don't think it's a partially owned. I think it's wholly owned. Zoox, Z-O-O-X, has robo-taxi-like technology. I mean, you have to bolt like 5 million cameras to the car, looks like, to get it to work. That might be an old photo. I don't know. Maybe they've condensed the technology a little bit, but interesting. And we'll see how Amazon plays into that. I also did an article earlier this week on Lyft and kind of theorized that, if the company were to get bought out, a company like Amazon that actually has self-driving technology, and that is how you would turn Lyft profitable, in my opinion, to complete a lot more of the rides with no driver in them. Well, that would be an interesting tie-up for Amazon if they would be able to get that by regulators too. Moving on to Netflix, start of the week at 348. This one also dead flat, essentially, at 348. Not a ton of news out of Netflix this week. Moving on to NVIDIA, start of the week at 212. Actually really peaked up all the way up to 229, slid down, but essentially finished the week flat at 213 as this company reports their earnings in 5 days, I believe, on the 22nd. NVIDIA shares score gains on potential AI arms race boost. This is true, okay? And I'm going to have to refactor this into NVIDIA's valuation. We'll talk about that certainly when they do their earnings call. We'll probably get some read on the upcoming quarter as well. So we'll get a little bit of guidance, a little bit of read through, and see the demand. Obviously, NVIDIA makes the best GPUs. I don't think I'm making a bold statement there, and they're used primarily in the computer servers that foster a lot of this AI. And so we'll see how much of that business is running through to the company's financials. Moving on to Google, start of the week at 94.74. This one too, just basically dead flat on the week. A key executive, which I apologize to her, I can't pronounce her last name, but she was with the company for a very long time. I believe she started with the company back in 1998. Some of you might not even been alive by then, let alone investing, and she is leaving the company. I tried to dig up like the juice on this. Like, is she really leaving? Whenever you see somebody like this and they say, I'm going to start a new chapter in my life, it's like, dude, you were on the best chapter of your life running one of the world's largest companies, and you were there forever. You're making a ton of money. Like, why would you want to move on? Sometimes it's a power struggle at the executive level. Some rumors that and these are just pure rumors, pure speculation, that Sundar Pichai is thinking his job is in jeopardy. So he's, given the boot, or he's driving some of these other executives, which would be seen as somebody that could potentially replace him, getting the boot. I don't know. Her right-hand man takes over at YouTube, somebody that also has been with that company for a very long period of time. Moving on to Microsoft, start of the week at $269. This one, the big decliner of the week, down over 4.3% to finish the week at $258. Microsoft said to discuss with new advertisers how to put ads into new AI-powered Bing. I'm looking forward to this. I advertise quite a bit on Bing, and actually I advertise the most on Bing. I spend quite a bit of money on Bing, and I'm interested to see how these new ads work and how they attribute to, from a cost perspective. I have a website, without giving it away. I've been trying to sell this website, so there's some disclosure agreements that I have, but essentially it's a website where you find out the price of something, okay? And you could absolutely type into a chatbot, what is the price of ... And my website could certainly spit out an answer. And so I'm interested to see how maybe I could use this. If I play around with this, if they give me access to this, which I think they probably would, I will let you know how it goes. One third party in China said to express concern over that Activision Microsoft deal. China is probably the regulator that we're potentially worried about the least as investors, as the country of China tends to approve these types of things. Moving on to Tesla. Speaking of moving, this stock started the week at, we'll call that 191. Boom, up 9%. Again, the momentum just staying on Tesla's side. Up 9%, like I said, to $208 and some change. Tesla boosts the price of its Model Y in China by 2,000. This is the second time since January. So Tesla lowered the prices. They saw that, maybe there was some waning demand. The cars weren't flying off the shelves. So they lowered the price, and all of a sudden people started ordering them again. I just love this about Tesla, the fact that they can shift these prices like this based on demand, and they can do it on a dime, gives them a huge competitive advantage, in my opinion. Now, Tesla to pause production in Shanghai, that's not good. But wait, it's a mid-factory upgrade. So they constantly do this over at Tesla, where they pause production maybe for a week, maybe 2 weeks. They do a couple of tweaks, and then all of a sudden the factory running at full capacity and spitting out more cars than it ever has. But if I tell you what, if Tesla pauses production in Shanghai due to lack of demand, the stock wouldn't go up 9%. It would go down, it might go down 90%. I mean, half their business is in China. Now, Tesla's Model Y is sold out for the U.S. in this quarter. So it's just showing you have massive demand for these cars. Now, obviously, they lowered the price a little bit. Obviously, with the supply chain and all those types of things, we'll have to see margins in subsequent quarters for Tesla. But as an investor, it's hard to make the argument that Tesla's going to have lower margins and investors are going to care. No, it is actually known on Wall Street that the margins aren't going to be as good over at Tesla. Investors are continuing to bid up the stock. Tesla is valued by investors primarily on getting more and more of these cars on the road, at least at the current time. So they're doing the right thing by lowering the price and continuing to jack out as many cars as they possibly can. Tesla revised their U.S. prices again in the fourth quarter, as again, they see these Model Ys, they're sold out here. There's huge demand in China, so they continue to tweak those prices up as they see fit. Tesla falls into negative territory after, quote, recalling 360,000 vehicles in the U.S. This is a somewhat deceptive headline. I think they should probably redo the headline. And it's not that I'm like some Tesla fanboy. I don't really care. I agree this with like Ford and GM and Mercedes. If they are doing, this is an over-the-air software update. This isn't, they're going to have to create a little part and then replace it. Like I had, one of my Teslas had to have some little part replaced, and they sent some guy out and he did it. That's a recall, in my opinion. A software update, while it does cost money, there is capital cost in terms of producing that software, distributing it, and all those types of things. There is a cost to that. It's not nearly like, $10 a vehicle for 360,000 vehicles. That obviously is a very significant cost. And so I think the regulators should redo the naming of a recall when it's a software update, and it should apply to all companies, in my opinion. Now, Tesla to open a portion of its U.S. supercharger network. This is according to the White House. I believe President Joe Biden even sent off a tweet. This is the right move for Tesla. It is a huge competitive advantage for their supercharger network. Any of you that own a Tesla, any of you that have taken any kind of extended drive in one, know that the supercharger network is vast, particularly out here in California. In other parts of the country, it might not be as vast, but certainly here in California, there is no shortage of these superchargers. Now, if I'm driving a Ford EV or a Mercedes EV or any other EV, and I can't use a Tesla supercharger, it actually is a more complicated situation. And a lot of those chargers also aren't as fast as the supercharger. So taking a trip from here from Northern California down to Southern California might not be nearly as comfortable. So opening up these supercharger networks, particularly when there's an excess of supply of them for Tesla, I think is the right thing. And they'll make some small margin on the cost to charge those vehicles as well. Elon Musk staying on as Twitter CEO until the quote end of the year, which is like a long time. Apparently not what Wall Street wants to hear. I think Elon Musk is managing his Twitter CEO role a little bit better than certainly it initially went. Obviously, it kind of ruffled a few feathers, but I think he's seen that maybe playing a little bit more down the middle. I think some people were viewing he was skewing maybe a little too far to the right or to a conservative angle, which is certainly, I think if you talk to him privately, he would probably be, he would center himself as someone in the center. But I think if you talk to him privately, he'd be viewed more as a quote unquote conservative, or what's more of a modern conservative here in the United States, but playing the role more down the middle, probably much better for his companies. And I think he's doing fine. I think there's a lot of talk about that Twitter investment. I think it's going to work out okay for him and everybody involved. Moving on to the technical segment of the show, the S&P 500 is just looking beautiful. I mean, this is exactly what we want to see. We want to see higher lows. We saw a higher high confirmed. I know everybody's freaking out. The stock market's coming back. We talked about how last week you're likely now coming down here to 39.50. That's another, 100 points, a little more than that on the S&P 500. If it does that, not concerned. If you're worried about these markets getting away from you, that's your first spot, okay, to accumulate shares. Further down than that is the key level, okay, down at 30, we'll call it 3,800 on the S&P 500. You would not want to break through these lows because then it just cancels out this technical pattern that we're in. Again, we're making higher lows, higher highs. That's basically, no, that's not basically, that is an uptrend, okay? That's the definition of an uptrend. So if you were to cancel out 3,800, you would not be in an uptrend. You'd be in some kind of other technical formation, which is more or less known as a downtrend. You would likely be retesting the lows that we made back here in October at about 35.80. And I would actually assume if you break through this 3,800 level, I would actually assume that you're going to be making new lows and you're going to be coming down to like 3,400 on the S&P 500. So we're in a holding pattern. I have not been buying any stocks. I've actually been taking a few chips off the table. You guys know with Meta, which we'll go to here now. I had a small position in this one. When it gapped up on earnings, I sold it up here. And it was an obvious sell because you created this large gap. And it was either going to fill the gap up here or push higher into overhead resistance at 220. So it was like going to go from 180, 190 up to 220. Or the path of least resistance was actually come back down here and fill the gap. That's what it looks like Meta is going to do. Your first opportunity is down here to 155. Probably wouldn't pick it up there. I think this one's probably going to have a little bit deeper pullback, but I will likely get back into this one. Fundamentally, I'm not 100% on board with what Mark is doing, but I think he's going to make enough cost cuts with the company that he's actually going to be able to help afford his little Oculus bet, which is not going to work out from a financial perspective in the next 12 months, probably not even the next 24 months or even 36 months. But if he cuts enough cost, investors from a free cash flow perspective, operating profit perspective, probably not going to notice. So I would just hold tight on Meta. That one should get a little bit cheaper here in the coming days. Moving on to Apple. This one's just hovering up here at an area of support at 150. If it breaks 150, you're probably coming significantly down, and that would pull the S&P 500 down with it. If this one, look, I can't tell you from a technical perspective. People complain. Sometimes I'm on here and it's like, well, the stock is either going to go down or it's going to go up or it's going to stay the same. And I know nobody's tuning into the channel to see this, but from a technical pattern perspective, that's kind of where we're at. Okay. If I thought, look, a couple of weeks ago on the S&P 500, I was like, we're probably going to top out here and we're due for a pullback. Okay. Same thing with NVIDIA, which we'll talk about here in a minute. Some of these stocks were due for a pullback. Same thing with Meta. It was due for a pullback, due to fill a technical gap. That's what looks like what's going to happen. Apple is in the middle of nowhere. This thing could go up, it could go down. We'll see what happens next week. Moving on to Amazon, it is walking down. So we have this black trend line right here, which I'm having trouble grab, this black trend line, it is walking down it, which is not bad from a technical perspective. As long as it doesn't gap down into that, that would be a problem. You're probably coming down here to the low 80s on this stock, which would be another opportunity, I think, in my opinion, to continue to accumulate this stock. Again, if you believe in the long-term vision, believe in the execution of the newer management in the C-suite over at Amazon. But this one also in the technical spot it's in is not really saying that it's going to go up. It's not really saying it's going to go down. It's essentially more or less in a holding pattern. Netflix probably in a slightly different boat. This looks somewhat like a topping pattern. You also have overhead resistance that is clear somewhere at 380. And I tell you what, this stock is up like more than 100%, I think, from its lows. So you would expect some kind of give back. The first give back area that we're targeting is down here, probably in the low 300s. That I think is the high probability for Netflix. A lower probability is you push up. Not only you got to push up to like 390, you've got to power through it. But if you power through 390, you get into 400, you are chasing this gap up here all the way to 510. And so there's certainly some momentum that you can monitor with Netflix. I think, though, the path of least resistance is lower for Netflix in the coming days. Moving on to NVIDIA, which reports their earnings. Let me double check. Yes, on February 22nd, it has been making just a beautiful technical pattern, okay? Had a beautiful downtrend, bottomed out down here at 116, and now has just been making just perfect higher highs, higher lows. Has it confirmed it all the way? What I would actually like to see is we're setting up here at the top. This is kind of a dangerous situation one way or another. Like, you could short this stock back down to the bottom of the channel. That makes a lot of sense. I would say that's the path of least resistance. That would form this technical pattern. This actually is probably a buying opportunity. The problem is you have earnings in just 5 days. So this would not be something I would be willing to risk on, because the other risk is if you are at here at the top of the channel and you break to the upside, it is basically mean that there's like nobody selling NVIDIA stock. If this thing could just like, it's already pushed from 113 to 213. And if it can keep pushing higher, I mean, you are going to retest these highs. So, I mean, is that probable? I don't know. I don't know what the earnings are going to look like on February 22nd. So we'll see what happens here. Certainly some high risk, high reward type of setups here. That's not my style. Some of you out there might be more inclined to do those types of things. My guess is earnings are okay on this company. It pulls back to this range. This would be the area, south of 200, I would say, is where I'd look for with NVIDIA. Moving on to Google. This stock, more or less, for many, many months, we're probably going on 6 months now, has been between 86 and we'll call it 100. The vast majority of candles are in that range. That's where we're at. We're actually towards a little bit above the midpoint on that. Not necessarily a buy, not necessarily a sell. What we're looking for with Google is probably a full back test to about the $90 range. Get to the $90 range. That'd be the first area where I'd be excited. There's an area further down at 86 would kind of be a triple test of that area. Buyers have stepped in at that area. If you believe that Google will get their act together and eventually produce an AI chatbot to compete with Microsoft's, that would be the area I would be excited about with Google. Moving on to Microsoft. This is very much like NVIDIA. So we've been making, in fact, I'll take out this kind of downward trend line because it's almost over. Not really. We'll put it back in if we need to. But you're obviously in this major downtrend since, I believe, November of last year, maybe even December. And, you started to make some higher highs. It was confirmed last week and we started to pull back. Nothing to be alarmed with. In fact, you could pull all the way back to like 230. So you could come another $20 off of this share price. I wouldn't be concerned. This would be the area where I'd be interested to buy Microsoft again, assuming that this technical pattern is starting a new uptrend. It doesn't have to end up being this steep. It doesn't have to be this kind of steep uptrend. It could shallow out tremendously and we could just kind of have this slow grind back higher. In fact, I think that would be healthier for this stock and the stock market in general. But any pullback on Microsoft, I would say south of, we'll call it 230. South of 230, I'd be excited. But like all of these stocks, if you're very risk averse, you're putting stop loss underneath the lows here. So the lows, most of these stocks bottom sometime in October or November. I could see buying this one at 230, and if I'm a scaredy cat and I don't want to lose money, you put some kind of stop loss under 215, because if you break 215, you are, you're coming well south of $200, I believe. You're making new lows likely on this green trend line, which would pull you, it would pull you back deep. You could have a very, very deep pullback. It wouldn't have to necessarily happen all at once, but you break this level at 215, you close below it. The probabilities say that, yeah, you're going to basically make that formation again. Moving on to Tesla, we have to keep inching this up. Every day I'm like, how much more does Tesla got to do to get to the top of the range? You've got another, I see the stock is actually right here. So you got another 28% to get back to the top of the range, and it would take a while. As these candles get put on the chart, they move to the right. And so you'd actually look at something like this. So you probably got a 25% rise to the top of the channel. There's overhead resistance up here at about 233. So I tell you what, Tesla still, believe it or not, off the lows to today, this thing is up like 80, 90%, darn near 100%. It still, believe it or not, has some airspace. Just to get back to resistance would be 120% move to the top of the channel. You're looking at 130. So yeah, this one has probably some more momentum. You'd expect at some point, like Microsoft, like Google, like some of these stocks, even Meta that has had a nice run, you'd expect some kind of pullback, and it could be deep with Tesla. Not breaking any news. This is a high volatility, high beta stock. Certainly you guys that have invested in it more in the shorter term certainly have realized this. Understand that when this stock reverses, and it's going to reverse, it's not just going to go up forever. When it reverses, it will likely reverse very quickly and very hard. But as long as you don't come near these lows back here at 106, you are on the verge of starting some kind of wild swinging uptrend. For this uptrend to eventually be confirmed, though, you need to get above 310. You get above 310 on this one. That is very, very good news for Tesla. It doesn't mean that you're just going to continue to rocket emoji to the sky, but it would take out these highs here and essentially confirm that these are probably the lows, at least in the shorter term back in January. That was the FAANG Stock Recap Show for February 17th. I hope you have a wonderful weekend out there, and we'll see you again next Friday. Good luck with your investments.